What is going on, guys? Today I want to talk about a covered call position that I recently opened up on Nike. So I'm looking to make a little over 1% from this play, and it's going to take 3 days in order to accomplish that. So you can see here, I purchased 100 shares of Nike. I think my cost basis is going off the screen a little bit here, but pretty much I purchased it for roughly an average price of $77.74. And then what I did was I turned around and sold a covered call after Nike had ran up, 10, 15 cents. And as you can see, it's a little bit below my basis, but with the addition of the premium, I'm going to be selling my shares away, roughly at $78.54. So I'll make roughly $80 in this trade. Nothing crazy, but it's definitely going to be a nice play. So let's go ahead and look at optionsprofitcalculator.com. It's a website that I like to use to analyze my, analyze my options trades. It's pretty helpful to kind of analyze or to kind of visually see it. So what I did is I selected Nike, selected 100 shares of this fund, of this stock rather, put in your purchase price of $77.74, and then scroll down a little bit further. You'll then click right option and then select it. Mine was the 77 strike, and then I got paid $1.54. I wish it would have had a little bit longer because Nike definitely ripped up to the upside after selling this call, which is fine, but I could have made a little bit more money. But what we can see here is our entry credit was $1.54. That's pretty much how much we got paid when we sold our $77 call. And then our max risk is not $77.74 or $7,700. It's actually that minus this. So that is this right here, minus 154. That'll give us the 76.20, and that is our max risk for this play. Obviously, if Nike goes to zero, we could potentially lose all this money. I don't think Nike's going to go to zero anytime soon. It definitely could pull back, but getting delisted from the stock market, I think, is probably something that's very not likely to happen. Can happen. Don't want to say it's not possible, but so our maximum return is $80, and that's calculated because we sold a $77 call. And what this is meaning is we're willing to sell. We're writing an option insurance contract that we're willing to sell our upside to get this premium. And we sold. What this means you're selling your shares. It's pretty much like a limit order for $78.54. If I can click right, $78.54, and that's $77 plus $1.54. That's pretty much how we calculate that. Minus 7,774 will give us $80, and we'll make roughly 1%. If Nike, finishes above the money, pretty much above $77. It's currently at $79 by this Friday. Probability of profit, 71.3%. Not sure how this is calculated. It's probably depending on, so it looks like it's the probability of returning at least 1 penny at the time of expiry. This figure is derived from a 30-day implied volatility. Okay, so something along the lines of that. Our break even is 76.20. So if it does finish below 77, as long as it's above 76.20, this trade will be profitable. So I have a couple of different options come expiration. I can just let the option expire in the money, and then my brokerage is going to exercise that option and sell my shares away at $77. I can then buy to close. If it's below, pretty much anything below $1.54, I can buy to close for a profit, or I can roll it out to a further expiration. If I want to hold on to the shares a little bit longer, and I can either sell the same strike, a higher strike. There's some different options there with that. But needless to say, this is kind of a rundown of the overall trade in the position. Going to make roughly $80. Like I mentioned, nothing crazy, but it's a 1% return on risk in about 3 days. So if I can do this a couple of times a month, definitely be pretty happy with that. And if I can annualize it, would definitely be happy with that as well. So that is going to be it for today's video. Please like and subscribe down below. Once again, this is how I purchased 100 shares of Nike and sold an in-the-money covered call option, and planning on making roughly 1% in a couple of days here. We'll see what happens. I may make a follow-up video to kind of explain my next move as far as if I'm just going to let these shares get called away, if I want to roll it, if I want to buy to close early, and so on there. That's stay tuned for that. I may come up with a video, just a little update video on that. But as always, this is not financial advice. I'm not a financial advisor. Please use this for educational / training purposes only. Do your own research. Make sure you're happy with holding the underlying stock long term. Don't just chase premium. Make sure you're willing to, hold these stocks long term. And Nike is a quality company that I would not mind holding long term. Yeah, it's been a rough year. I missed a couple earnings reports, but long term, I'm pretty happy with holding Nike long term if I have to. So that's it for this video, guys. Please like and subscribe down below.